Hello, friends. It's Adrienne Gilbert, the Realtor, and I have some fun stuff to share with you today. We're going to talk about where the housing market is, where we expect it to go, and some info that can help inform your decision making if you're considering buying a home or selling a home. It's going to be relevant to anybody for this. And so I'm going to talk some about that stuff through a presentation that the National Association of Realtors gave back in December of 2022. So let me bring that up real quick. Here we go. And this is going to help us see nationally what's been going on. Boom. All right. So the first question, is there a house price crash coming? Everybody's been talking about oh yeah, the housing market's been crazy and the prices have gone up so far, so they're got to come down. Well, here's some data that helps us to know whether or not that's true. You'll see here job cuts in the last housing cycle before that crash around from 2008-9 time. There were about 8 million job cuts. Right now, we're not having job cuts. Here's the total amount of jobs. And then the next thing that's important is subprime loans. The lending practices back in the early 2000s were very different from what we have now. There was a lot of money just being lent all over the place. It was easier to qualify. You could get these big old loans. And now there are more rules in place to protect both the lending institutions and those holding the mortgage, the buyers. And so that was something that was going on. Loans were not great. It was prevalent then, but now there's virtually none of those subprime kind of loans. So now loans and home value match up better too because of the appraisal practices. So the next thing is the 5-year cumulative to new home construction before crash. So there were a lot of new homes being built, and then versus now we've got 7.65 to 4.6 million. So that has really come down. And then the next one that's connected is how much inventory is on the market available for purchase. 3.8 to 4 million back then, now 1 to 1.2 million. So just imagine if you had 4 times more houses to choose from than from what we have now, because we're in a lower inventory situation. Doesn't mean there's not houses available. It just means you have to, the inventory just isn't as much. And once you see something, you got to get it. So then the next thing is mortgage delinquency. It was 10%, around 10% then. Now we're down to 3.6. And then the last thing here, homes in foreclosure is down. It was 4.6%, and it's not even 1% now. So that has really changed and affected things in a good way. Let's see. I'm going to skip through a few and then go down. And if you want this whole presentation, I can provide that for you. Just let me know. All right. So here's what we've got going on with the mortgage rates. You can see from September is whenever it starts showing this, it's going up, 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 up. In October, we had pretty high, early November. And that is what we're seeing as the high point. And now we're down. And right now we're around, last I checked, it's close to 6.5. So we're hovering in this range, not up here in the 7s like we were for most types of loans. So that's encouraging for sure. Let's look at this map of the states real quick. Oh, there it is. So we've got payroll job additions from pre-COVID days. So here we've got some percentages. You can see green is good. Kentucky is 1.68% gain. And so we've got a little bit of growth pulling us up. Some areas have seen a lot of growth, as you can see. So that's looking good that we're kind of in the middle upper with a little bump up for jobs in this region. Let's see, mortgage rate. Next, I want to show you mortgage rate forecast. So this is important. So if you're thinking, well, I'm going to wait till the interest rates go down, here's what economists are expecting with the mortgage interest rates. We had them go down and then up, and Q1 is what we're in right now. And that's about right. It's around 6.5. And then the expectation is a slight dip down into the upper 5s by the middle to later part of the year. So if you are really wanting to wait, of course, these are projections. We don't know for sure what's going to happen, but it might be that later in the year we get a slightly lower interest rate available to buyers. Let's see, what was I going to show you next? Home price growth. Oh, I need to go down. Here we go. Here we go. Home price growth. So here we are. So as you all saw, there was a lot of upward growth for the prices of homes. And where we are now, this is growth. Zero is your baseline here. So the growth has slowed, and which is a good thing because, as you can see, it got kind of astronomical. And so the growth has slowed to a more normalized level. But the projection is that the home prices will decrease around mid-year, possibly. Now, look how small it is. That is here, this line is 5%. So that's just a couple of percent if it does. But that's another thing that's kind of pointing toward, perhaps we can see a market that has shifted into slightly lower prices then, but then it's expected to not stick long and continue to go up. So if you're thinking about selling, you might want to either go ahead or wait till quarter 3, 4. Again, these are projections. We don't know exactly what will happen, but this is what things are pointing toward as far as home price. I like this. All right, here's what's happened. 2019 was, like a baseline here. So we've got home price went up about 5%, dollar volume 5%. 2020, we had more sales, home price up 9%, another 9%, dollar volume up again. 2021, again, sales were up, home price was up 16.9%. So 21 was kind of a crazy year. And then the dollar volume was 25%. And 2022 is where we saw like a dip down happened, 16.2% down. Home price was around 9.6 up, and then the dollar volume down. And then 23, we're thinking a 7% decrease, no change in home price overall. And then 24, there's an expectation of a 10% increase in sales, 5% increase in home price value, which is about normal for the trends averages year to year. So that's kind of what we're looking at, that things are probably going to be more flat in 23. And so that's the end of that report. Let me go back. I'm going to go back to me. I'm going to stop this sharing. Here we go. Here I am. Okay. So that's what we're expecting moving forward. I hope that helps inform your decisions. Of course, that's a lot of info. And I can, like I said, I can send you the presentation so you can look at it for yourself too. But I'm happy to meet with you and talk with you about what you're looking at for your upcoming year or couple years, and how you can plan according to what it's looking like in the market cycle, how you can plan what's the best move for you. So yeah, contact me and we'll talk about that. And I'm happy you joined me, and I'll see you around.